Good morning, everybody, and thank you for joining us to this online policy dialogue organized at the Digital Clearinghouse. The Digital Clearinghouse project is organized by the University of Namur, the University of Tilburg, and the European Policy Center, with the support of the Open Society Foundation's OMIDR network and the King Bad I Foundation. So, welcome to this policy dialogue we're organizing, and I'm very happy to have with us an incredible panel of speakers. My name is Andreas Aktoudianakis, and I'm leading the digital policy work at the European Policy Center. And today we're going to be focusing on the transatlantic debate of merger policy for the digital era. So just a couple of words of background about the Digital Clearinghouse. As a project in our Digital Clearinghouse, we have been trying to create a platform to facilitate cooperation, dialogue, and exchange of insights and best practices between regulatory authorities, policymakers, researchers, and other stakeholders. The Digital Clearinghouse was initially launched by the European Data Protection Supervisor, who is actually joining us today, and thank you so much for this. And yeah, it was a part of an initiative opinion in 2016 as a voluntary network of regulators. So that's for me. I don't want to tire you with any more background. I'll pass the microphone straight to Alexandre, who is going to moderate the discussion. Thank you so much, and thank you for joining us.
Okay, thank you very much, Andrea. Good morning or good afternoon to everyone. So we decide for this dialogue to focus the discussion on something which seems to us very important and at the policy level and the academic level, and that is merger control, and whether there is a need to change things either at the substantive level in terms of theory you use or in terms of institution, in terms of who should cooperate with who, in the merger control in the digital area. Because merger control in digital area raise a number of new issues or extended some old issue. And in particular, we want to focus on two of them this afternoon. One is a predatory acquisition, or what's sometimes called a killer acquisition, the idea being that a big tech generally buy a small tech to kill competition, to alleviate that this small tech become big and compete with the big tech. But on the other hand, it doesn't kill the innovation, because very often what the big tech is doing is integrating the innovation its own ecosystem. And the question, and some also are saying it's innovation by acquisition. So the question is what a merger authority should do with that. Should it allow it? Should it prohibit? Now, the topical example which is often mentioned is Facebook, WhatsApp, in the sense that maybe Facebook bought WhatsApp because Facebook was afraid that WhatsApp would have become a competitor to Facebook, and there is no complaint in the US, which has been launched by the FTC, which tried to tell that story on the basis of Facebook internal document of the time. But as we know, the Facebook WhatsApp was authorized in the US as in Europe. And so the question is whether it was a good or a bad decision. And now we have a new issue which is close to that, and that is the Facebook Giphy acquisition, which, as we know, the CMA now has ordered a divestiture. And so we have Amelia, Fletcher from the UK here, who surely have probably a view on that. So that's one issue, the predatory acquisition. The other issue, which is linked but not the same, is the privacy concern, and how far privacy concern as a concern for competition, because as we know, privacy is or could be a dimension of competition. And so the question is whether, if there is a privacy concern, how far a merger authority should take that into account in its analysis. And here, for instance, a good example is Microsoft LinkedIn, where in fact the European Commission has imposed some remedy on Microsoft LinkedIn precisely because it was afraid that the acquisition of LinkedIn by Microsoft will decrease the privacy competition on the social network, on the professional social network, and this is why some remedy have been imposed. But on the other hand, in the Google Fitbit merger, I mean, some people, some academics, and also some privacy authorities have said that maybe the Commission should have been more aggressive and prohibit that merger. As we know, the Commission has allowed the merger with remedy, but some says that's not enough. So you see, we have a lot of cases, recent cases, which illustrate those two issues that we wanted to discuss. And as I said at the beginning, I think those two issues, predatory acquisition and privacy concern in merger analysis, raise two types of question. One is, should we change the theory and the methodology that we are using in merger control or not? Are they okay? It's just a question of whether there is a problem on a case by case, or so is a problem more fundamental than that, and we have to change the theory. And then the second thing is, should we change the cooperation? The UK has embarked in a very interesting experience with the Digital Regulation Cooperation Forum, which is a forum of the CMA, so the competition authority, but also the ICO, the privacy authority, and others. But I mean, it's structured the dialogue between the different authorities. We don't have that at the European level, and it's more difficult to do at the European level because we have a European antitrust authority, but we don't have privacy European authority, so it's probably a little bit more difficult to organize this kind of dialogue. But this is a dialogue, for instance, which had been called by the EDPB, which is the network of privacy regulator in Europe, in the context of the Google Fitbit merger, but which from the outside, at least, it didn't seem to take place so well, or didn't take place at all. And so the question is whether we need to try to rethink also institutionally how the institutions are talking to each other. So to address those different issues, we have four really outstanding speakers in what they have done concretely or what they have written. First, so we will start with the EDPS supervisor, Wojciech Wiewiórowski, who, as Andreas has recalled, I mean, the EDPS was the initiator of this digital clearinghouse, which was precisely about that, you know, to organize a better dialogue between antitrust authority, privacy authority, and consumer protection authorities in Europe and beyond. Okay, so and this is a project which was launched in 2016, so quite with a quite of a foresight, we could say. So we will start with him. Then Guillaume Loriot, who is the Deputy Director General in charge of merger in DG Competition, should join us. And then we will hear the view of two prominent academics in Europe and in the US. Amelia Fletcher, she's a professor of competition policy at Norwich Business School. And also, you are involved in the CMA work. And then Susan Athey, she's professor of economics at Stanford University. And both of them have written and thought a lot about the issue that we will discuss today. So thank you very much for the speakers, for the viewer. And now we start with you, Wojciech. Thanks again for having accepted the invitation.
Thank you very much, Andreas. Thank you, Alexandre, for allowing me to open this today's discussion. I'm very happy to do that. Digital Clearinghouse was always the project which I was very connected with. Actually, you said about starting the project in 2016, when the notion of Digital Clearinghouse has been established, and the idea of permanent cooperation started to be the center of our discussion. But actually the project started earlier. It started already in 2013 when we started to discuss with Peter Hastings, with Giovanni Buttarelli, about the cooperation of the data protection authorities and the competition authorities on the national level and on European level. And I had the privilege and the chance to take part in the first meeting on this subject organized by the European Data Protection Supervisor, right? I did it not as an EDPS, because I was not working in DPS at this time, but as a national data protection authority in my country of origin in Poland. So even before I joined DPS, the project was somehow birthing, and I had an opportunity to look at it from the very beginning. Because one of the things which I was always aware of was that while we have quite a good cooperation on the national level with the authority responsible for consumer protection, we cannot say the same about the competition authority, despite the fact that it was actually one and only authority, because in my country of origin, that was the Office of Competition Authority and Consumer Protection Authority being the same institution. And as you know, the project itself, the clearinghouse, have been launched by my predecessor, by Giovanni Butarelli. And over the time, this initiative had already two main phases. And the second phase is the one that we are somehow summarizing today, which was the cooperation with academia and the contributions from all the stakeholders involved in this project are now to be used for the further developments of the practical cooperation. And that's, I may say that we have the map of what's going on. We have the map of the connections that are established already. We have also some information on how it looked on the borders with another regulators. That's what we did in the first phase of the project. Then in the second phase, I guess we gave the good academic background to the idea. And now it's really high time to get the practical profits out of that. From the very outset, the Digital Clearinghouse has been the journey into the interfaces between the data protection and the competition. The aim of this journey is not to the theoretical exploration, but we want to arrive to the very practical solutions to some of the main challenges of the digital economy. And these challenges are made increasingly urgent by the increasing dominance of certain online service providers. The legislative proposals of the Digital Service Act and Digital Markets Act illustrate that the digital clearinghouse is needed. It now probably more than ever. And it was inspired by this great foresight and strategic vision that were presented last year. For example, the recent report of the IMCO Committee on the Digital Markets Act clearly recognizes that the data is a power, and so-called data keepers can gain significant, really significant advantages over their competitors by leveraging the vast array of data, including the personal data, at their disposal. The IMCO report envisages the Commission should be able to restrict the gatekeepers from engaging on acquisitions in order to remedy to prevent the damage for the internet market and for the whole digital market. When doing so, the Commission may take into account the different elements, such as network effect, data consolidation, and whether and when the acquisition of targets with specific data resources can significantly put in danger the contestability and competitiveness of the markets. EDPS welcomes this enhancement of the attention which is paid by the legislator to the data as the competitive advantage. We think it may warrant the restrictions and on acquisitions. Data protection has an important role to play in the context of the enforcement of the competition law, including the mergers and acquisitions. And there are different aspects which are relevant when assessing a merger involving data intensive companies. The key factor is related to the possible cross-use of the personal data by the major tech company and the impact to the possible combination of the data following the merger. We have to remember that every time we have two controllers that are joining forces, we start to ask ourselves, what does it mean for the purposes of their processing? Is the purpose that we're taking into consideration when the company A was processing the data still the same when it starts to be used also for the resources of the company B? Are the data sets which are in the possession of these two, or in the control, I would rather say, in the control of these two controllers, the same, similar, or different? And what does it make for the purpose limitation principle? The possible risks that we concern is the in-depth profiling of the individuals due to the combination of the data and the possibility to draw unexpected interferences and the use of the data when it's far out of the contexts that were originally collected for. The compliance with the data protection law, and in particular with the principles of the purpose limitation, lawfulness and fairness, helps to promote the level playing field among the economic operators, both before and after the merger. And let me say at this moment also that while I can say what does it mean for the purpose limitation, why we can discuss a lot about the lawfulness, I have the problem to discuss about the fairness. This problem is partly going from the fact that this very word fairness, which was used here, have been translated to the 22 languages of the EU in completely different way. Just as a homework, you can check how the General Data Protection Regulation looks like in Article 4, when we are, sorry, Article 5, of course, when we are talking about the principles, and we have this lawfulness, fairness, and transparency being in the one line, in one point. How does it look like when you translate it to the languages which seems to be similar one to another, but the notions which are used are completely different? In 2020, the Commission opened the in-depth investigation into the Google proposed acquisition with Fitbit, recognizing that intersection with the data protection and are really big. And the Commission sought the assistance of the European Data Protection Board. In light of its long-standing commitment to promote the fair processing of the personal data with open markets, EDPS declared to take lead in the preparation of the European Data Protection Board's opinion. So in this sense, we may say that our point of view was taken into consideration by all the data protection authorities preparing that. EDPS contribution focused first and foremost on mitigating of the possible negative impact of the merger on data protection and privacy, as well as preventing the possible frictions triggered by the pro-competitive measures, e.g., we may say as an examples about the measures mandating access to personal data under certain conditions. And from this experience, the EDPS derived an increased awareness of the competition law specificities and the procedures applicable to the assessment of mergers in the context of the competition law. And our opinion, which we gave on the Digital Markets Act, was very much influenced by this approach. We recommended the additional measures to ensure the complementarity and oversight among the relevant competent authorities and the data protection authorities. In particular, EDPS has recommended in this opinion that both instruments provide for the institutionalized and structured cooperation between the relevant competent authorities and the data protection authorities. And the share of information was the main point of this cooperation. And here I have to go to the name of the project, Digital Clearinghouse. When we were establishing it in 2016, we thought about Clearinghouse as the platform to have this information sharing between the data protection authorities and the competition authorities. And today I can say, after these 5 years of work, that we do not have too much progress in this area. While we have the progress in the exchange of knowledge, experience, and even the cooperative work on some parts of the materials, we cannot say that we went to the procedural problems connected with the information sharing between the authorities. And let's say in the end, what we do expect now. What do we do expect now? Next year, EDPS will host a conference which brings together the global stakeholders from the digital regulatory sphere. We want to devote it to the enforcement of the personal data. But at the very beginning of the discussion, what can be the part of this enforcement? When we went out of the European Union and start to look at the examples in the other jurisdictions, how does the enforcement of the data protection looks like? The main question that we heard from the participants of this project in the other jurisdictions is, what about the cooperation with the competition authorities? So whomever we invite from outside the EU to tell us about the discussion that goes on in the other jurisdictions on enforcement of data protection, they all ask us, do you want to discuss only about the data protection? Or you want to take into consideration also the cooperation with the competition authorities? Because this is the most important thing which from our perspective should be taken into consideration. And we hope to encourage the discussion on the different approaches to enforcement actions and facilitate the sharing of experiences on best practices and systematic challenges in enforcement. And I sincerely hope that you will be able to participate in this discussion. And just let me finish with one sentence about what I found in my mailbox when I opened it today on Monday, looking at the information which I'm just provided with by the news information agencies. Well, the first one was about the discussion in the UK on Microsoft and Nuance and the merger of these two companies, or rather merger, taking over the Nuance resources by Microsoft. And the second discussion, which starts also today in my country of origin in Poland, is about Apple using the privacy in their new terms of the services that they propose to the companies. And the doubt from the data protection authority, from the competition authority, if this is not anti-competitive use of privacy. So on one hand, we are talking about the cooperation, but we are also talking about the kind of, I would not say fear, I would not say doubt, but at least the challenge for the cooperation, which is, don't you use the other part of the story to damage our activity. So the data protection authorities being afraid of using the competition in order to lose the protection of the fundamental rights. and the competition authorities doubting if the privacy or data protection is not used in order to distract the competition between the players on the market. Thank you for the possibility of making this introductory speech, and I'm staying with you, listening to the discussion.
Thank you very much for this perspective and for this call, this passionate call for cooperation among authority. As you say, I mean, this is a long-term project that you recall us, so which started in 2013 and which will continue with this important conference that you have announced for June next year. So thank you very much. We will probably come back on some issue, the DMA, the Google Fitbit. But let's now turn to the Deputy Director General in charge of merger in DG Competition, Guillaume Loriot. So Guillaume Loriot knows digital quite a bit because before in your previous position, I mean, you were in charge of many very, very important digital case. So, but here we will focus on merger. So what is your perspective on those issues, predatory acquisition, privacy concern, and do we have the right tool? Do we have the right methodology in antitrust? Do we have the right institutional setup to have this cooperation? So here we will be keen to hear your view on that. And also I want to recall the viewer that if you have some question, please don't hesitate to ask them in the Q&A, and then we will come back to you when we have the Q&A session after the four intervention. Guillaume Loriot, thanks again for having accepted our invitation.
Thank you, Alexandre. I see familiar faces. So hi, Amelia. Hi, everyone. I'm very sorry to be late. It was beyond my pay grade, but I had to be in a meeting where I couldn't really escape. So I've missed a bit of the conversation. So forgive me if I catch up a bit. So Alexandre, on your 2 points about killer acquisitions and privacy, do you want me to set the scene a bit on how we see things, or what?
Yes. If you can set the scene on those two issues, so predatory acquisition and privacy concern, and in particular, do we have the right theory? Do we have the right institutional cooperation framework? If you can just give your preliminary remarks.
I give preliminary remarks. I mean, these are very wide and complex topics, so I don't want to be too long either. So I don't want to bore the viewers. So let me try to set the scene. These are two different, but obviously they can be interlinked topics. But I think the first topic about killer and predatory acquisition has been on the map of competition enforcers worldwide, for a while. It's new to the extent that merger control in its essence is already kind of a challenging exercise when you look at companies that are well established already, when these are horizontal mergers, or even more when these are non-horizontal and vertical mergers. So the topic of killer acquisitions is really one that has added some level of complexity to something that is already based on predictive analysis by definition, as you know, and which is already, let's say, rather complex. One thing that is important for me when I just set the scene about this first topic about killer acquisitions from our perspective is to distinguish several issues. First, from I think on the substantive side, the debate, especially as regards tech, about killer acquisitions, for me is sometimes a bit, if the concept is too narrow, is a bit counterproductive, because if you really look at the concept of killer acquisition, it's one where essentially a player, whatever the market or the sector, acquires a kind of nascent competitor in order to discontinue that potential competition. So it's really something about stopping the development of a company and stopping the development of a potential competitor. That might happen. That might happen in many markets, and not only digital, by the way. I mean, we know, and I think that's where it came from originally, the pharma, the pipeline products, where one big company would buy another one in order to stop the pipeline product. We have to keep that in mind. I think it's very important not to narrow it down to digital or tech. because I think it's wider. And you saw, for example, in the US, one of the first challenges about killer acquisitions has been in the financial sector when Visa acquired Plaid, which was a fintech kind of a player, and that was really considered as a killer acquisition in the strict sense, where the large player like Visa wants to discontinue something that might be competing with it. I think that's why I'm saying that. Why I'm saying that, because in my experience, and again, I think it's there will be many cases to discuss in the years to come. In my experience, in tech or digital, or with digital platforms, it may even be more complex, because I would rather tend to say that we are faced with the issue of early acquisitions. Early acquisitions meaning that you might have a big player, big platform, buying a company that is still nascent, that is not, that doesn't have a turnover yet, but which might play a role in the market. And the very fact that that platform acquires it might help it to extend its position from one market to another. So it's not really about killing, it's not really horizontal, it's really non-horizontal. And I'm saying that because from the merger perspective, obviously the type of assessment you have to do in these non-horizontal cases are even more complex. And I think tech markets, by definitions, these are interconnected markets. And I think that's something that people in the DMA have very well understood. There are many issues that arise from the link between different neighboring markets. And I think, Alexandre, you wrote something on that. We discussed it, but I think that's very important. So I'd rather talk about the early acquisitions in the wide sense. Some are killer acquisitions, other are non-horizontal mergers, and they raise very different types of issues. Because obviously, if you kill a competitor, that's very, very straightforward. You need to show it, but that's very straightforward. When it's interconnection, it becomes a bit more complex. So that's for one issue for the substance, and we can come back to it. But that raises an issue for us because we see that in all these kind of acquisitions of nascent companies, whether in digital, whether it's platforms or technology markets, so it's wider than the pure DMA issue, whether in biotech, whether in financial, whether in many sectors where you might have a very disruptive and transformative technology, we, at least competition authorities, want to look at that. We want to review them. And that's why the debate that has come now in Europe is about what are the tools for you, Commission, to look at these mergers that normally do not fall under the thresholds because there's no turnover of one of the target generally. What do you do to review these cases? And we've done a very lengthy assessment all over this. I mean, to see what we had missed, if we had missed anything, what would be the best system to make sure that we can at least review these transactions, and if there are problems, to intervene. And we've considered various things. I know in the UK you have a voluntary system, so the competition authority can intervene in whatever case. In Europe, we don't have a voluntary system because we have this, this call for legal certainty where you have thresholds and so on. And in Germany or Austria, they've called for value thresholds where the value of the transaction would be a good indicator to look at that. Here in the Commission, as you know, the Commissioner, we've proposed to use the tools we have since the origin, which is the referral system, which is a corrective mechanism that allowed from the origin a member state to send to the Commission any case it had where they thought that there would be an issue. And we think that relying on that system was consistent with what we have in our merger regulation, instead of debating for years about changes, but also because we see that every system has its own drawbacks. Lowering the thresholds, the value thresholds, may mean that you have a lot of transactions that need to be notified to us. And we saw many in Germany, concerning real estate and so on. It's not really what we want to look at. And by the way, in Germany, you have the same complexities as well. I mean, determining the value of the transaction is not necessarily easy. And on top of that, there are many other aspects about the nexus and so on. We can come back to that. I don't want to go into every details, but I want just to set the scene so that you understand our philosophy and where we come from. Obviously, the topic today is tech or digital mergers. And we're very aware, as you say, Alexandre, I think I've been working in the Google Shopping and Android cases and Amazon and all the less known cases. And I know these are, complex markets where we need to see how to be intervening effectively and looking at the issues, to make markets work better. And I think obviously it's a very prominent issue in tech. Everyone, I think, will agree. But I don't think we should fall into the mistake of thinking that it's only for tech. We have a case ongoing on Illumina Grail, which is on. I don't want to expand because it's ongoing, but at least you see that the issue arises in biotech. It may arise in fintech. It may arise in other markets. So I think it's a mistake to consider that we should focus only on digital. By the way, digital means many things. In the DMA, we're talking about the big platforms, but frankly, for me, digital is well beyond these platforms. You have e-commerce, you have many new markets that become digital, let alone technology markets. I mean, think about all the chips markets that we see. We have NVIDIA ARM at the moment. We had cases with Broadcom, Qualcomm, and so on. So I think it would be a mistake to think that the issue is only with big platforms. I think it's wider, and there are common points, especially the issue about interconnected markets. How should we act? How should the regulation be effective? I think there's an issue about interoperability, which is very prominent in all discussions, in particular in the DMA, but not only. So I think it's something that we need to think of very thoroughly. And that happens in mergers as well, not only in antitrust. And obviously, we are facing this issue. So that's setting the scene maybe for killer acquisitions, and I hope it allows you to at least understand where we come from. But again, I think thinking that it may affect all sectors, what we don't want is having double standards. That for one sector you would have one standard and another standard. We think merger control has to be fair. We have to rely. There are some presumptions of dominance and so on, but we have also to make our cases. And that happens for all markets, and I think we're very vocal on that, because I think once you start that, in some sectors you will be asked to not to have the same standard, and we have this issue being discussed in the telecom case in Hutchinson. So that's for the first topic, and again we can come back to that. Then I think there was the second discussion about privacy and our cooperation. And I think the EDPS obviously made some remarks on how that can be improved and how privacy considerations can be taken into account in competition settings and vice versa. If I didn't miss, I think the spin of the debate. And I think, I mean, we always have to improve. So I'm not someone who's not open to improvements. I think the competition authorities and the Commission in particular, they've been very keen to see how things can be improved and cooperation, effective. I think we've heard years ago about, concerns that competition enforcement was not taking into account privacy issues. And I think we've made a big, all of us, whether the Commission, a big, progress in terms of how, always thinking, are the issues here, notably about data, obviously, that require some either know-how or input and advice or different types of interventions in cases that are competition cases and vice versa. I mean, obviously, the institutional setting of the Commission is different from one, of the CMA or the UK. I don't want to judge. I understand there's a lot of cooperation between a national authority, for example, in the UK, and other departments dealing with the privacy issues. And I think here in the Commission, as you know, we're an integrated institution. So we have we have other DGs, we have DG Connect also, providing a lot of input in our inter-service. When there's a transport case, you have a DG Move. And when there are, I think, and we're doing our best for that, when there are issues about data aspects that may require privacy, considerations, I think we want to call to the EDPB and the EDPS to be involved and tell us what they think, how, whether it makes sense under their own framework and so on. And frankly, I mean, my experience is that we've done that in Google Fitbit, for example, very thoroughly at all stages of the procedure. It was very useful. And that has been integrated, and we can come back to that in many aspects of the case. And there are also, technology cases that, frankly, the issue is not about, privacy as a parameter of competition as such. There are many others, as you can imagine. But what we do, and I think that's the approach, is that we've been very clear that in Europe, competition enforcement, when you look at merger control and you assess a case, you always look at what are the parameters of competition on the market. Is it only price? Is it quality? Is it innovation? Is it all of them? And is it competition on privacy? And I think that's very important because, for example, in the US for a long time, it was a very restrictive approach based on price competition, whereas in Europe, we have always been a bit more, wider than prices. But I think obviously privacy as one parameter of competition is something that we have considered from the beginning. I mean, we made it very explicit in Microsoft LinkedIn, where indeed it was a market where there was, at least the market was telling us, we compete on privacy beyond the regulatory duties. So we want to preserve that, as we would like to preserve competition on innovation and so on. And when we see that emerging, and obviously we're not, we face the market realities and we ask the market what's happening and the market tells us. And when that happens, we want to take that into account, and we've done it in Microsoft LinkedIn. I think it should continue. And if cooperation and dialogue can be improved in whatever way, we would do it with notably EDPB and EDPS. But my sense is that it is very important to be cooperative on the operational side, on case by case, when we see that there are issues that for us, may require input on the privacy side. But on the principles, we can obviously continue the discussions, and it will continue. But I think now it's very important to be, operational. And I think we tested that in Fitbit. We thought that it worked well. We had the lengthy, I think the EDPS was closely involved, but also the EDPB. So the board that supervises all the national authorities, regulators, so that we get input from them on the substance of the case, but also on remedies, and that's what happened at the time. And I think on that, I don't really remember what was said before or whether there was an issue there, but I think at least in terms of spirit, I think it's well understood on our side. Now, can competition solve all privacy issues? No. It's obvious that you might have privacy issues with players that are not dominant. You may have, so it wouldn't be a good tool to address all the privacy issues that we face as citizens, and for which I'm very sympathetic, that should be addressed. But it's clear that competition is not there to solve it as such. It's there to solve competition issues. But if privacy is one element of competition, I think we should step in, and hopefully we've done it. So I think that's a bit the scene. Maybe I was a bit too long, but very genuinely, that's how we see things at the moment. And obviously, maybe things will evolve. With the know-how, I think everyone is working hard to try to be right, and things are not as simple as they may seem sometimes on the headlines.
Thank you very much. Thank you very much for that. Yes, and we must recognize that I think Digicom has changed quite a bit over the last 5 or 10 years. If you compare, the decision you were taking 10 years ago and now. So I think the learning has been quick, and for that, I mean, we should congratulate you. Maybe I have 2 quick follow-up questions directly to you, Guillaume, if you agree, and then I go to Amelia. But one thing, and I think it was very interesting that in the predatory acquisition, you distinguish very well between an horizontal acquisition and a non-horizontal one. Okay, and the non-horizontal one, as you mentioned, are maybe more complicated because its perspective is non-horizontal and so on. But I wanted to ask you, do you think in this specific context of predatory acquisition, maybe we need to be stricter than you used to be for vertical or conglomerate acquisition because of those market interconnection that you were just mentioning? So do you think in those, I mean, of course it's a case-by-case analysis, but maybe for those conglomerate we need to be a little bit to be a little bit stricter? That's one thing. And the second thing is on the cooperation. So you mentioned this operational cooperation that you had, but do you think that at some point we should come to something a little bit more formalized, as the UK has done with this with this Digital Regulation Cooperation Forum. Now, you are right to mention that it's different in the UK because it's two national authorities talking to each other, ICO and CMA. Here, you don't have a European privacy regulators, but the point is more, although there are some different institutional settings, do you think you should formalize a little bit more this kind of cooperation with the EDPB and DGCOM, or no? Do you think it should remain as it is now on a case by case, no formalization at all?
So maybe your first question, Alexandre, before I go to the cooperation issue, and maybe I can just say a word about cooperation with the US because we just came back.
Yes.
But on your first point, if I understood correctly, you were saying that we should be stricter on non-horizontal merger or on killer strict horizontal mergers.
No. My question is, do you think you should be stricter on conglomerate merger, okay, so the non-horizontal one in particular, the conglomerate one, than what has been done so far?
So on that, I mean, it's been a topic for discussion. You will remember well since GE Honeywell, Tetra Laval. You know, the EU Commission has always been more interventionist on non-horizontal mergers than many other authorities, at least in the past. And it has been with mixed success, 20 years ago on Tetra Laval, on GE Honeywell was a very heated debate. But it's true that our approach has always been not to look away from vertical issues. And why is that? Well, we're an authority that has to take decisions, reflects on the market investigations, and we want to motivate, and we have to all our decisions, whether, either way, whether they are positive or negative. And in some of these non-horizontal mergers, you have the market complaining, and you have to address these complaints, either because you believe there are issues or not, but then you have to explain why. And I think it makes a big difference with other systems where you can prioritize which type of case you go for. And that explains a lot why the Commission has always been more, confronting these problems. Again, these are complex issues, but I think there's a tradition there. And obviously that tradition has, and we've discussed it many times, has also been spotted in the digital markets, because by definition, these markets are, again, I repeat myself, I'm sorry, interconnected very often, technically at least, and sometimes commercially. I don't need to remind you about the old Microsoft cases, about interoperability information and so on. Even in antitrust, you would see that there are very often that abuses arise in a neighboring market. It's not necessarily only, it's to extend in a neighboring market rather than. So when we see these issues in mergers, I mean, we think we're strict. The question is, what do you mean by being stricter? Because there are cases where we are sometimes criticized for not blocking, for example, but where we see that we still intervene at least more than anyone else, no one else is intervening. So, it's a very difficult choice. Sometimes you want to find solutions for the market because that's our job, is to make sure that the market can work. And very often the market, tells us, well, you should ensure this and that. We see whether we can do it. There's a bit of a sliding scale. And sometimes, the stronger the concerns, the less likely you find remedies. But this is a very important, and we need to be objective. I mean, as you know, we abide by the rule of law. We want to avoid politicization in the sense of, just having discretion and so on. We want to say what we do and show what we have in our files. And that's very important. And obviously many issues that are in the DMA now, and I know very well, I've worked on that, and it's inspired by many cases we had. They also reflect the issues that we see in tech markets. And it can be about not sharing data or sharing data. It can be about interoperability. There are many different issues. And what is important, I think, is to be able to identify the issues and see whether, it's a no-go, this is too important, or whether you can solve them. And we are still at this stage at a moment where, sometimes you hear that nothing can be done, but we see and we work on it, and we learn by doing. On cooperation, whether with the EDPB, with the EDPS, again, I think we are not people who are dogmatic either way, and we want to cooperate, and we want to have effective cooperation, whether it's about making it formal or whether doing it effectively and knowing each other. I think for me, as long as it works, it's good. So I can't really give you a kind of principled answer on that. I'm always happy to meet and discuss these things. And maybe last thing on the cooperation with the US, I think, obviously we went to the US last week with the commissioner and Olivier and people from the, from DG Comp to give this new impetus to cooperation in competition in technology markets. I mean, as you can imagine, there's a kind of new mood in the US. We've been extremely well received. I think, they've seen what we've tried to do for the last years, and that's very encouraging. That's very encouraging, and I think they see, what the challenges are. They are very important. They are not simplistic and simple, but we need to address them and show that we want to address them. So I'm happy to. So I hope I answered, and I don't want to monopolize the floor, but I hope it gives you an answer to our.
Yeah, super. Thank you very much. Thank you very much for those very precise answer to problems which are complex, as you say. Let's go now to Amelia, and Amelia, if you can react to what you have heard, and maybe also give you the some of the UK perspective, which are also at the forefront of those issues. Thanks also, Amelia, for joining us.
Thanks, Alex. Just to say right up front, Alex mentioned that I'm involved at the CMA. I'm not speaking for the CMA. I'm speaking with my academic hat on.
I forgot that.
just to cover. So I'll focus first on topic one and then go on to topic two, as Guillaume did. First of all, just to agree absolutely with Guillaume that I think that. Sometimes there's been an over focus on this killer acquisitions term. And I think the issues arising in mergers involving digital firms, and particularly the big tech firms, go wider than what we might just call killer acquisitions. So, and I think he explained very well why that is the case. I thought it might be useful because I was involved in the very original Furman report, looking at competition in digital platforms, where we had a number of recommendations around mergers. I thought I might just very quickly go through what those recommendations were and where we've got to. So, because there were 4 actually, and the first was simply that authorities, and particularly our recommendations are obviously targeted at the CMA, that there should be greater caution about these mergers and more basically curiosity and in-depth scrutiny. We were really concerned that an awful lot of mergers were going through without even much review or only very light review. And I think that recommendation has been taken seriously in pretty much every jurisdiction and is really, really helping. And I think, Facebook Giphy, you mentioned earlier, Alex, is the first big block, I think, in around the world, CMA case that came out last week. If this holds on appeal, which of course I hope it will, this will be, I think, a genuinely path-breaking case, and really demonstrate that kind of more in-depth scrutiny, because that's a case where I think people originally thought, gifts, silly little gifts, that can't possibly be an issue. And I think the CMA has explained why it is an issue. The second point we made was that we thought the merger assessment guidance in the UK was really very substantially out of date and needed updating in a number of key areas. There's a whole set of areas we highlighted, but in particular, we mentioned the approach to non-horizontal mergers, which you've just talked about, where we said that actually the guidelines was overly benign towards these, and actually we needed to revisit that. The treatment of network effects and multi-homing, which is critical in understanding how mergers are going to work in this space. The approach to mergers with nascent firms, and obviously Guillaume's already talked about those. And I would just highlight one extra point there, which links to the counterfactual, which is, of course, predatory acquisitions might be about wiping out a potential rival, and that's what we call a killer acquisition. But very often they'll be about denying that technology to a potential rival. That might be a rival that's already a firm, it could be Google buying Waze to prevent Apple buying Waze, but it means, or to prevent Apple and Google and Amazon and others having access to an independent Waze technology. And I think that thinking about that counterfactual, what would happen in the absence of the merger vis-a-vis this technology, it's not just about would it survive, but who would have access to and use it. So that was, and those merger assessment guidelines in the UK have now been changed, and I think that is feeding into better review, more effective review of these sorts of mergers in the UK. The third point we looked at was notification and jurisdiction, which obviously we've just been talking about. We thought that that was clearly an issue, but not actually an issue, particularly in the UK, where our thresholds are relatively expansive. But we were very clear that we didn't think that the world should be relying on the UK for merger assessment, just because we had kind of these relatively expansive jurisdictions. And so we're really very much welcome the new EU approach of expanding jurisdiction via enhancing the referral system. I think that's really good. Those 3 points we were very clear were kind of general points inspired by, but not necessarily just for, the biggest tech companies, but we also had concerns about the substantive merger standard for the very biggest tech companies. We felt basically the merger standard was problematic given the high degree of uncertainty around these sorts of mergers, but the potential for them to give rise to really very serious detriment if it turned out that they were going to be anti-competitive. We made one recommendation which wasn't accepted, even in the UK. The current UK proposal, which is still a proposal under consideration by the government, is not the one that Furman reported, or kind of the US approach, which is more to reverse the burden, and we didn't want to reverse the burden because we did recognize that many of these mergers will be genuinely synergistic, not significantly anti-competitive, but rather we wanted to lower the intervention standard to what the UK already uses at phase 1 for referring to phase 2, and the terminology is realistic prospect of a substantial lessening of competition, rather than that substantial lessening of competition being more likely than not. It was that more likely than not that we thought was difficult given the level of uncertainty. I would just highlight, and I'm sure you're all very aware of it, that with the Hutchinson 3G General Court judgment, the EC is arguably moving in the other direction from what we're recommending on a general basis. And I think that, personally, I think that's very dangerous. So that's what I was going to say on that aspect. On topic 2 around privacy, I was asked to think about whether you could just address privacy issues by looking at it as a dimension of competition. Obviously, Guillaume also looked at discussed that a bit. Clearly, you can to some extent, but I would emphasize a number of qualifications to that point. The first is that, as was highlighted earlier, the competition issues relating to privacy are actually very often related to the market power that can arise from the proprietary holding of consumer data. And of course, that's only indirectly related to the original competition on privacy aspect. Although, of course, privacy may well be relevant to the extent of competition risk because it affects the potential for data to be shared either across markets or with other firms. The second qualification is that even if privacy can be seen as a kind of a form of quality, so people choose on the basis of privacy like they choose on the basis of quality, actually it's an aspect of quality that consumers don't think terribly clearly about and lack information about, and where their choices, as the CMA has found in its examination in this area, their choices can be very severely affected by the choice architecture that they face, so the way in which privacy choices are presented to them. So, consumers don't really know what might be done with the health data that can be obtained by their Fitbit, for example, and they don't even really know how much to care. And I think that is really relevant to how well competition on privacy really works in practice. And it goes to this point about how we, it's one of many reasons why we can't rely on competition to achieve what we need in terms of privacy. I think a third proviso is that there are aspects of privacy that I think are a bit different to just quality, and it relates to this kind of fundamental human right aspect. And there's some way in which you feel that privacy shouldn't simply be a tradable thing, just like quality. But I think this is really complex, how tradable privacy should be, and in what circumstances that I find hard to think about myself, but I do think it's not straightforward. I think issues like fairness, which as was highlighted earlier, itself is an incredibly complex term. And more generally, just issues around how we want society to function in the relation to privacy and the sorts of data, private data that might be extracted from consumers. And I think all of these are harder to address via merger law. And the final point I just wanted to make about merger law relates to post-merger enforceability. Now, long ago, we decided, and actually partly associated with those cases that were highlighted earlier, Tetra Laval-Sidel and G. Honeywell, we concluded that the existence of Article 102 wasn't sufficient justification to allow firms to achieve dominance through merger. Why? Because Article 102 enforcement is costly and imperfect. So if you allow dominance, it will impose a big enforcement cost on society, and in any case not avoid the abuse because it will be imperfect enforcement. So it's much better to just prevent the dominance from being established in the first place. And I am fearful that we are at risk of forgetting that lesson when we think about GDPR. And I'm worried that we're allowing mergers sometimes where we think, well, GDPR will deal with any problems that arise in terms of privacy and data. And we need to be very aware that GDPR is itself imperfectly enforced. And we need to be very wary of mergers substantially adding to the GDPR enforcement burden as well. So I think generally the link with GDPR, but I think it's also true, even with behavioral remedies that DG Comp might put in place, because, so Alex mentioned earlier, Microsoft LinkedIn, and I don't know a lot about that particular merger, but I know there was a behavioral remedy relating to data. And we know that as with all behavioral remedies, you just need to really think very carefully about the enforceability of those by DG Competition. DG Competition tries to avoid putting them in place generally because they tend to be less effective and impose a burden on DG Competition to enforce them. And I think that, again, we need to just be really careful before putting in place behavioral remedies related to privacy in just the same way as we need to be generally cautious of them. And I will finish just with a point about the cooperation, since everyone else has talked about it. I do think, there are some tensions between privacy and competition. There's some synergies, but there's also some tensions. They go beyond just merger law. They are generic across competition, the competition policy area. And I do think, therefore, it's really critical to have good engagement between the competition and data protection authorities. As has been said several times, we do in the UK, I think we have achieved this. It was actually first developed, the relationship between the CMA and the ICO, in the context of the digital advertising market study that the CMA did, where there were many allegations of tensions between privacy and competition. And actually one of the big issues that I think remains actually quite a big issue generally is that it wasn't very clear precisely what was required by GDPR. So Google in that particular case and Facebook were saying that they couldn't do certain things because of GDPR, but it wasn't clear whether it was really because of GDPR or because it was in their interest to do those things. And actually the relationship between CMA and ICO didn't entirely clear that up, but was very, very helpful in at least further identifying exactly what the specific issues were. We've now put that on a formal basis, as everyone has said, with the Digital Regulation Cooperation Forum, and that included in that now Ofcom and FCA as well. It's early days, but I think that forum is very positive so far. And I think what's been interesting about it is it's not just a place where these people can get together and discuss things when an issue arises, but they're actually getting together in a proactive way to think about what are the difficult issues and what specific pieces of work could be done jointly between them to try and address those issues up front rather than waiting for problems to arise. And I'll leave it there.
Thank you very much, Amelia, for that, and also for these last things, which is, I think, very interesting, that the forum allows the kind of proactive approach and not just reactive approach when you have care. I think that's very interesting. I just want to one remark and then one follow-up question. On the substantive standard of review, I mean, you mentioned that maybe the EU is not going in the right direction with the CK Telecom case of the General Court. But as we know, this case is now on appeal before the Court of Justice, and it's not clear at all whether the Court of Justice will confirm that approach. Personally, I think it's a bad approach, at least. Like you, but also legally, it's a bad approach, because I think this case completely undermined the reform which was done in 2004. And so let's wait, I think, for the Court of Justice decision before taking a stance of where the EU is going. But then I was intrigued by your point about the post-merger enforceability, when you said, okay, the GDPR may be difficult to enforce, and therefore maybe it's better to solve the problem ex ante with merger control. But as we know, I mean, and as Guillaume has recalled, I mean, competition law cannot do everything. So would you say that because of this post-merger enforceability problem, we should have a specific privacy ex ante review for some big tech mergers? So, you know, as we have, for instance, in telecom or in energy, you have some specific complementary review next to the antitrust review. Do you think it would make sense because of this post-merger enforceability of the GDPR, or you wouldn't go that far?
So I guess it's a really interesting question. So there is the competition issues that are associated with privacy, where already I think DG Comp could, you know, prevent a merger on the basis of that if it wasn't just relying on GDPR solving the issue. Should you be able to stop a merger just on the basis of privacy, so not wanting data to be shared and not wanting to rely on GDPR? I think there is actually some argument for that. That clearly would require additional powers. If so, yes, I mean, I think there is, logically, there must be some argument for that, but I haven't thought about it, the pros and cons of it that deeply.
Okay, we will come back to that in the next event. Susan, now the word is to you. Also, if you can give your view on those two things, and also the US perspective on all of that, if you want. Thanks again also for joining us.
Thanks very much. This has been a really interesting conversation so far. So I wanted to go back and pick up on a couple of comments that I heard. First of all, the question of whether we are going to have different standards for different markets, and, you know, how customized policy needs to be. And so I just want to remind everybody, like, big picture, you know, we developed shorthands to try to translate certain economic concepts into something that would be easier to enforce. And so with simple markets, things like, you know, concentration, horizontal concentration, do a good job as shorthand capturing whether there's pressure on a firm, competitive pressure that's going to induce it to act in the interest of consumers. So things like market definition and concentration are good shorthands. But in these more complicated multi-product markets, platform markets, two-sided markets, and markets where, you know, you think about companies having 10 or 12 different interrelated products that all are potentially supporting market power. These simple shorthands don't do a good job of capturing the underlying economic concepts. And so I think one thing that I'm excited about in the last year or two, but we had not done a great job previously, is sort of translating the economic concepts into more effective guidelines that actually adequately capture what the ultimate goal, which is whether there are economic constraints. And so I've certainly seen over these years, but still today, especially in the US with some complicated precedents, people getting themselves tangled into knots about trying to fit a square peg in a round hole. And, the judges and others not fully understanding, well, if things are complicated, kind of what's the ground truth? What do I fall back on? And is there, and so falling back on the economic concepts, I think, is important. And so I would like to see this get even further codified. I think the Furman report, moves in that direction, but we need to have examples that people can rely on to say, okay, this is how this overall concept of understanding what constrained firms plays out. So I've written a paper about this, which is just an example of that, called Platform Annexation with Fiona Scott Morton. And there we talk about this distinction between vertical mergers and horizontal mergers, and how often in more modern markets, something that looks vertical is actually having its impact by lessening horizontal competition, but there's an indirect channel. But just because the merger or the conduct is not originally horizontal, that doesn't mean it's not going to come back and hurt competition in a core market. And that can be particularly egregious. One of the things we focus on in that paper are when a platform, what we call annexes adjacent tools. So if there's a tool that helps buyers or suppliers multi-home, or there's a tool that impacts how constituents make their choices about platforms, that's a place where you really want to watch out for a dominant firm who is going to integrate into those tools to cement their dominance. But on the other hand, an entering firm or a weaker firm might need to buy or create those tools. If the dominant firm has tools that are advantaging itself and the competition authorities haven't done anything, which is, has to date been a big problem, then, an entering firm may have to find their own. And so I do also, and I think we ought to remember also just, what's pro-competitive and what's anti-competitive. We don't want to use new platform policy to prevent firms from doing what they're supposed to do. So in general, in a supply chain, we do want platforms, even if they're platforms, we do in some cases want them to squeeze suppliers and pass that on to consumers. So we need to be able to distinguish if that's what's happening. If we're cutting out middlemen, if we're getting more efficiency, that can be good. I mean, historically in the US, some company like Walmart, people didn't like that they squeezed suppliers, but ultimately they were operating in a competitive market, and they were bringing low prices to their consumers and bringing low margins to their consumers. We want to distinguish that from what's anti-competitive, which is, squeezing suppliers to raise margins and, raise rivals' costs or do other things. So I do think we have to, when we're doing these guidelines, we need to have test cases. Would these guidelines stop some of the mergers or contracts that I think were problematic? Say I worked for clients on things like Google acquiring ITA. I saw that aftermath of Google acquiring DoubleClick, and then merging data later. Those were some things I worked on. Google's long-term exclusive contracts with Apple, which antitrust authorities looked at and said for a while, hey, that's not a problem. And what was it about the frameworks that thought that those things weren't problems? But then would still allow, kind of this Walmart-like behavior to continue, and also would understand the realities of entry. So another big challenge is that we need to think about who is doing the conduct. And so I think we've tried to see people in some cases in proposed legislation in the US, which hasn't gotten traction, but that just says, big is bad, like big firms can't do X. And I also want to remind people, if you ever want competition in these highly concentrated, high barriers to entry markets, a lot of times it's going to be a big player who comes in. So, I work for Microsoft in search, and maybe one reason that people didn't want to listen to some of these complaints was they didn't like Microsoft. They were used to Microsoft being the big baddie. Okay, but like Microsoft was willing to burn billions of dollars to sponsor a search competitor, and so like who else was going to do that? And when we look at mobile phones, since 2010, who has attempted entry? Well, Microsoft tried, Facebook tried, Amazon tried. Now, these aren't your favorite, firms necessarily, at a big picture from an antitrust perspective. We have some concerns about all of them in certain markets, but we also really don't want the world to have no competition in mobile phones. My God, that thing gets between you and everything, that has such large externalities. And so, just saying that, a big firm can't enter, well, I guess we're stuck with a duopoly forever. So, understanding who would actually have the incentive to enter and how could they enter? And, a firm that has some complementary products might actually be the only one who has the incentive to enter. They're going to make money in some other way by doing this entry, and that's what causes them to try to overcome this, or they have some other capability. So I do think it's hard. You need to be careful about this. A few other comments. Generally, I guess, just first of all, some of these products really do have a lot of externalities on adjacent markets. They're different kinds of products, search engines, mobile operating systems. It's kind of like transportation and communication. Like, you just can't operate without access to them. And so we have to think more carefully about them. We need to think about what are the key entry strategies coming to the killer acquisitions. We need to think about how would you possibly get a new competitor here? Are you like for mobile operating systems, it's going to have to be somebody who's, got some other, capability or skin in the game so that they're going to be able to profit through this early phase of losing money. There's, who's going to enter? Is it going to be a nascent competitor? If it's something like, we've seen multiple markets where entry can occur by solving the chicken egg problem in a niche and then expanding to be a general competitor. So the vertical search manipulation was problematic there because we have firms that are providing a specialized service, but collectively there may be what helps constrain, and some of them can grow into being more general competitors. So we have to understand the theory of entry and how barriers to entry get overcome to understand where we need to look especially closely to mergers. We also need to remember that long-term exclusive contracts can play a very similar role. So like the fact that Google had a long-term lockup with Apple, basically preventing Apple from either entering in search or sponsoring a competing search engine, that was a long-term exclusive contract. Actually, those can be easier cases because there's often very few efficiency problems. And I just, it's hard for me to wrap my head around why agencies were not interested in long-term exclusive contracts while everybody's getting all bent, for years, all sorts of long-term exclusive contracts just couldn't get the competition authorities interested in them, even though they seem like they were much simpler than trying to break people up or, do other or regulate ex post. And so the long-term exclusive contracts, part of the thing is I think there was an insufficient understanding of the theory of entry. For a lot of these scale-driven businesses, the way that you enter, you have this myth of organic entry that like, even a search engine, you get some consumers, you get some advertisers, you get some consumers, you get some advertisers. That's not how it works. All of these marketplaces and platforms, they typically make business deals on one side or the other to get a big chunk of consumers, which then helps them attract the other side. Google partnered with Yahoo and others to get the users, which then help them attract the advertisers. And so understanding that these business deals in the background can be really crucial. I think that's just learning the institutions of an industry and also understanding the economics. when you're trying to solve chicken and egg problems, you need to figure out what are your sources of distribution. And if a competitor has locked up all of those sources of distribution, it's just like, raising rivals' costs, or, it becomes very difficult to enter. And I want to again re-emphasize that we have to think about who the players are. Mika Delrahim, when he was DOJ Assistant Attorney General, addressed these issues, talking about 2 cases, both of which I worked on and agreed with the DOJ on. One was blocking a contractual agreement between Google Search and Yahoo Search, but allowing Microsoft Search to form an alliance with Yahoo Search was pro-competitive. And so again, understanding if this thing is going to be concentrated, we really don't want number 2 to die. It's really bad when number 2 dies. When you just have one, that's really problematic. So you need to watch out for that. On the privacy side, I agreed. I thought Amelia put it really well. It's very hard for competition to really discipline privacy. One challenge I think that's especially difficult in Europe is this concept of a fundamental human right interfering with getting privacy for your constituents. So one of the first times I spoke about privacy in Europe, I talked about cost-benefit analysis, and someone stood up and screamed at me because I didn't understand that it was a fundamental human right. But the point is that, if you have a monopolistic firm and a moderately effective regulator, that's not going to get you privacy. Privacy requires choices. So competition won't give you privacy, but certainly getting rid of competition isn't going to help privacy either. And we have to take the long view. So we need to understand, if we use privacy as an excuse for multi-product firms to have a huge competitive advantage, then we're going to have huge multi-product firms. And firms are going to merge, and the big multi-product firms are going to be the ones that survive, and nobody will be able to compete. Now, one of the huge problems from an economic perspective with privacy is understanding the difference between people's feelings about it and what the real risks are. And so there's this disconnect, and we've had, I think, to me, counterproductive policy. You're essentially educating the public that the worst possible thing in the world is a cookie. A cookie is so dangerous. I have more warning labels about cookies than I have about anything else in my life. I've just seen so many warning labels about cookies. They must be really terrible. But there's no warning label about a company that watches you in everything that you do, that has telemetry on your phone, that knows whether your phone's in your pocket or in your backpack, that knows where you've gone, that knows if you're in the same room when you're watching a commercial or not, that can look at all of your browsing data, all of your location data, and put together a super profile. In terms of risks to you, or risks to national security, those super profiles can be much more dangerous, because if I can find everything that you've done, I can blackmail you and create national security risks. I can blackmail a leader of a company and get them to do something that creates not just harm to the person, but harm to society. So, understanding that our policies have promoted super profiles and created, outsized risk, and we're not necessarily addressing. So the idea of somebody buying and selling your data makes you feel upset, but the reality might be a little bit different. And so I think we need to take a hard look at whether, the privacy policy is actually promoting privacy, whether it's creating barriers to entry and creating, major cybersecurity risks and national security risks. So I think these are questions that need to be addressed. And finally, privacy and security should not be a get out of jail free card for competition policy. And here's a problem that in some cases, if you can show any efficiency benefit, you're out of jail. And you can always wave your hands about privacy and security and say, oops, I'm sorry, I have to control everything. And so again, I want to just caution here. I think I feel like competition authorities 10 years ago were somehow thought that contracts were okay, even contracts between major competitors in a duopoly. Now we need to step back and say, well, Is privacy and security an excuse for anything? And aren't there less restrictive alternatives? If you actually just think about things logically, there's many ways that you can achieve privacy and security in a platform. You can have licensing of certain technologies. You can let people put a user interface on top of technology that you've structured. You can have basically at cost mandatory use of certain services. You can provide reviews. So privacy and security can be implemented in many, many ways. And one other important fact about the way technology works to keep in mind is that large technology firms, even within a single product, I don't know, like a search engine or a mobile operating system, actually have to break themselves down into smaller components that communicate via APIs. And so, if an app comes onto an app store, there's API calls. There's an app store itself is going to make calls to other services. A search engine is composed of lots of smaller algorithms which talk to each other. So it is actually often technically possible to think about outside firm relationships being similar to inside firm relationships, because inside firms, they have to govern themselves. In order to keep things secure, they have to keep things kind of sandbox themselves. And so one service within a firm is going to have to call another service. So I guess like this myth that everything's one big technical soup that can't possibly be deconstructed is just not true in practice. And there's very often, if you ask, well, how did you solve these problems internally? When you introduce a new thing internally, what happens? That can be a guideline for what could happen with external partners as well. And it's not like you have to make things a free-for-all. You can have, if a platform can have very strict requirements to get on. It's not like you have to let anybody come. You can, so it's not like it's an overwhelming task to govern this. Just like, when a firm buys a service, it has to integrate it. It could have those same relationships externally. So I really hope that we can avoid letting privacy and security policies and complaints lead us to a situation where we have much less privacy and much less security. So thank you.
Thank you very much, Susan, for all those super important and interesting points. Bon, unfortunately, we are already next to the end. Maybe I have, Susan, just one very quick follow-up question, but very quick because we have only 2 minutes. On this vertical and horizontal things and things which may seem vertical could become horizontal, do you see a sense that the US authority will become stricter on vertical merger or no? Given what you have just explained, and I have asked the same question to Guillaume, but do you think the US will change their approach on that or not? You don't know.
Well, I mean, we have, it's complicated without additional guidelines and regulation, because I think the courts have really struggled with this. So I hope that we will follow the lead of the UK and others by really trying to write a more precise and specific translation of what the economic principles are into these more complex settings. Because I think without regulatory guidance of some sort, the courts aren't really going to be able to handle these cases consistently. We're not going to be able to count on the courts to handle these cases.
Okay.
Oh, you just muted.
Guillaume, on this cooperation US-EU you just mentioned, is there something about those revision of the guidelines that you think there is some useful cooperation that you could see or not yet?
I mean, cooperation on the issues about vertical mergers or non-horizontal mergers, clearly, I mean, I think it will become increasingly operational, because you see also that in the US, I think there's a mind shift from that perspective. I think whether the US would review the guidelines, I understand there are different types of constraints than ours. I think for us, the issue is not so much our own guidelines. We've had our guidelines since 2007, and the framework about ability, incentive, impact on competition. We don't think it's the thing that prevents us from dealing with the cases. Not at all. I think the issue is first, having these cases are complex, and sometimes you need to show the evidence. I think the standard of proof, as Amelia mentioned, is very important for us. We think that with the balance of probabilities, I mean, it depends on how the court looks at the evidence, but normally we should be able to do a lot. But the question is then what the court would consider. So for us, I think we well aligned with the US now in terms of thinking that indeed vertical mergers can be problematic, whether in tech or also in other sectors. And then the question, I think in the US is more about the standard of the guidelines and maybe the courts. For us, it's more, how do we, how will our courts will deal with that? But for the moment, we've challenged them when we could. So.
Super. Thank you very much to all of you. I mean, maybe I take away 4 points. First is this point about verticals. Clearly, I mean, that will be, I think, authority will change regarding to the vertical approach. Theory of entry, I think what Susan mentioned is very important. We have to understand better the theory of entry in those sectors, and maybe two big players is better than only one big player. Cooperation, and as Amelia was saying, this cooperation needs to be proactive. And Wojciech mentioned that there is this big conference, the DBS organized, where, I mean, this proactive cooperation may be thought through. And finally, of course, competition law cannot do everything, and for the reason that Amelia and others have very well exposed. So thanks a lot to all of you, and for your fascinating talk. And I hope we will continue those discussions in other forums. Thank you very much to everyone.
Bye-bye.
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 Bye. Bye, Amelia. Bye, everyone.